Ladies and gentlemen, welcome back to another Bitcoin video. Bitcoin is on track. That is the topic of this video. Bitcoin is on track, and we do have some short-term analysis that is new, some new short-term analysis that's come out here. We've finally formed a market pattern, but ultimately Bitcoin is on track. We'll discuss, the next all-time high, when that will be. We'll discuss when we're getting above 28.6k, which of course is the major resistance zone we're faking right now. And we've got a few other things to discuss as well: total cryptocurrency market cap, Ethereum, interest rates, inflation, basically doing a broad market update. So all the information here is incredibly important. I'll try and keep it as brief as possible as not to drag it out for a long period of time. But we're looking at quite a informative video here. So first and foremost, what is going on with Bitcoin daily chart? Well, daily chart, of course, has broken above 25.2k range quite a while ago now. That was the range that held us down from June 2022. Broke above that range. We're currently consolidating. Okay, we're currently consolidating in between 26.6k, which is this pink line, which is the base of our consolidation zone, the support zone for this range, and pushing up against around 28.4k. Now, you might be wondering, you're saying, oh, Wolf, why do you say 28.4k? There's clearly wicks above it there. Well, I'll say this. It's 28.4k because if we flip over to the 4-hourly chart, we can see we're yet to close a 4-hourly candle above 28.4k, and hence it stands to reason that the actual precise resistance zone is that 28.8k level, not 28.4k, 28.8k level, that red line there. So once we get a 4-hourly candle close above that, it becomes very highly likely that we actually break above on a macro scale and start heading upwards even further, which will be excellent considering the importance of that zone. Now, everyone is probably well and truly familiar with the fact that 28.6k to 28.8k on the weekly chart is basically one of the most major resistance zones Bitcoin has ever seen. And I don't say that lightly. I mean that when I say it. This red line here is one of the major and strongest resistance zones Bitcoin has seen, at least in 4 years, right? At 5 years, actually, because 2018, okay, the previous strongest resistance zone would have been this zone here in 2017, 2018. Once we got above that, which took a few weeks of consolidation, which could be similar or foreshadowing what's happening right now, by the way, a few weeks of consolidation before a breakout. Once we got above that, we skyrocketed to the upside. That was a major zone. I would expect a similar thing. If we do get above 28.8k, 28.6k, this red line here, I would expect some sort of rocket to the upside. We can see the definite similarities, by the way, between, let's just delete everything from a chart, and let's just go and make a very simple analysis here. Red line at the same kind of bull market support level in 2018 as we have now at 28.8-ish. Okay, look at that bull market support level. It was the foundation of the bull market. It held us up during the bull market. That's the exact same thing we're seeing over here. Again, people are very familiar with this by now. But the point I'm making is this. We came down afterwards, and this just goes to show how similar market structures are over time. We came down, we broke down below, we saw a cup formation, and we saw a few weeks, right, 3 or 4 weeks of consolidation, right, and then we broke to the upside. We've done the exact same thing, guys. We've come down, we saw a big breakdown, a large kind of cup formation. We're seeing 2 or 3 weeks at this point in time, could be 3 or 4 if we consolidate for a little while longer of consolidation. If we're going to follow 2018's pattern, 2019's pattern, we can very well just break to the upside here and skyrocket to the upside. Now, that's the thing, right? We are looking quite similar to what we've done in the past. The big question is, will we follow what we've done in the past? And that's a very hard to answer question. But what I can say is this, right? And let me find the chart before I say anything. What I can say is this: there's no rush. There's no rush. Okay, we can break to the upside. We also can break to the downside. I'll get back into this chart in a second, but what I've kind of been looking at over the last few days or weeks is the fact that if Bitcoin does in fact break down, basically we're in good territory so long as we manage to hold 25.2k, okay? 25.2k being this lower red line. So long as we manage to hold that level, we're in healthy territory. We're still in the upper range. We break below 25.2k, we're re-entering this lower range here. We don't want to do that. That would actually be very bearish, and doing that would actually validate some of the bearish argument. So long as we're above 25.2, it's looking good. But there is kind of evidence stacking up at this point, okay? And now, I'm not going to be too confident about it because there's nothing to be confident about, but there is preliminary data stacking up, alluding to the fact that Bitcoin could be seeing a breakout right from this range right now. So what I mean by that is there's data stacking up that kind of assumes or indicates that Bitcoin could be breaking to the upside from this 26.8k to 28.8k range, okay? Breaking to the upside like this. Now, obviously, we have that fractal that we just looked at from the longer term charts saying that this looks pretty similar to 2019 before the break to the upside, but also the short term charts have finally formed the market pattern. One of the reasons we've been staying away from short term analysis in the recent week or so is because there hasn't really been any clear market pattern. There's just been a range. Now, we've finally formed the market pattern. We've formed a descending channel formation, which is two parallel lines, as you can see here. And that thing, descending channel, generally breaks to the upside. We can see this channel is validated by a triangle on the RSI. And what we can also see is that this uptrending yellow line on the price chart, which stems all the way back here from October, this uptrending yellow line, you see this one over here, okay? That is compressing Bitcoin between the red line and the yellow line. So we're seeing compression zone. Now with this channel, okay, we can make a new apex for Bitcoin, and we can say that Bitcoin is going to compress between the yellow line and the channel line and break out before the 15th of April. And if we see a breakout before the 15th of April, if we break upwards, it's very likely we do something like that. Break up downwards, we go down the bottom of the range. But the point is, we've kind of narrowed down the time frame now, because previously, right, we were going to see a breakout at the compression zone over here at the apex on the 27th of April. Now we're going to see it by the 15th. So this range has not got much longer to go. We will be seeing a breakout of this range shortly. If you ask me whether it's going to break upwards or downwards, I wouldn't be able to give you a clear answer. Unfortunately, I think there's too much data going both ways. There is a lot of bearish data as well. For example, volume is downtrending massively in an upwards range, which is not good, not bullish. You don't want to see that happen. But, you know, there's also an abundance of bullish data. I think it's one of those time periods. This is one of those ranges, one of those zones where it's kind of a bit skeptical. You know, you're not really sure what's going to happen. And that's why I don't suggest taking longs in this position. I think you should be waiting for a breakout, and specifically waiting for probably a weekly candle close if you can, depending on the price action when it happens, before taking longs. That's my personal opinion. Now, I'm not saying that a break to the upside is unlikely at all. I don't think it's unlikely. I think basically it's just 50-50 at this point. I know that's not what you want to hear from a market analyst, but I'd rather tell you something that I believe. I believe it's around 50-50 rather than just lying to you and saying it's going to go up for the sake of the video and clickbait. I don't believe in doing that. I think it's you know, a bit of a no trade zone at this point in time. There's lots of data going both ways. If you believe more in the macro, which I personally probably do, then you probably say that it's going to follow something like 2019 and break upwards. And so I guess considering now that I think about it, I probably would lean slightly more towards the idea of going upwards from this range. But I do think that even if we go downwards from this range, I don't think that Bitcoin will break below 25.2k, and I do think that the bottom is in. So regardless of what happens in the short-term range, which will be over shortly, right, by the way, within probably a week, you know, we're looking pretty good regardless on a macro scale. So it's not looking bad. And, you know, going back to what I was saying before, you know, Bitcoin's in no rush, guys. You know, it's really not a problem. If we take some time, take a little break here, some correction, I'm not saying we're going to do that. Again, I'm not saying anything about short term, but if we do happen to do that, it's not to worry about. We've seen, you know, all these red lines indicate bull market support zones similar to that of 28.8k that we've seen in the past. And as you can see, these measurements kind of show you from where we broke down below that line to where we broke back up again. So it's taken 420 days in 2015, took 189 in 2018, and if we're taking an average between 420 and 189, we can see it's going to take 308, and that means we'll break above 28.8k in the 10th of April, which could be this week, so there's a chance we break it this week. But if we're taking the longest possible measurement, being 420, it could actually take all the way up until you know, the end of July. So the point is this, you know, we obviously don't get a clear prediction based on this chart, but it gives you an idea. And the point it's trying to make is that there's no rush, so it's not like we're racing against the clock. Bitcoin's actually perfectly on track. If anything, it's actually a little bit ahead of schedule. So, you know, if we did take a little break here, it wouldn't be the end of the world. I did want to make that point. I also want to make the point that, you know, this is meant to be quite a bullish, you know, year here, 2023, quite a bullish year, not particularly bullish, but given the fact that we've seen a cross, if you draw your attention to the RSI, we've seen a bullish cross on the RSI between the 14 moving average and the RSI line itself. That has triggered a green square on the price chart, and this is a chart I made up by myself. But generally speaking, we've seen these green squares in the past. We've seen these bullish crosses in the past, and in the past, they've given us 5,700% gain, 228% gain, and 550% gain. So it's looking quite good. We are in another period where we're looking to see a large gain over the next probably 6-7 months. And I do have a lot of faith for the rest of the year for Bitcoin. And I do think if we do see a correction, it'll be very short-lived and we'll be back up again within weeks. That's my kind of overview and what I'm personally thinking right now. And again, just another chart showing we're on track here. If we look at days between the bottom and halving in the red measurements, we can see that it's generally 500 days between the bottom and the halving. We bottomed out over here in November, and that is, if we're assuming the halving is going to be in April, which it probably will be, roughly 500 days to April. So that's perfect timing for the bottom, not to mention 4-year cycle theory, but this is another aspect of it. And then if we're looking at previous measurements from previous all-time high to new all-time high, which are these yellow lines here, we can see it's generally taken around 1,100 days. If we extrapolate that data, we can see that the next all-time high on Bitcoin will be in around December 2024. And that's indicating again that there's no rush. We've got, what is that? 20 months. We've got 20 months to get to a new all-time high as per the previous data. There really is no rush at all. And we are, I say there's no rush at all, but we've been rushing, right? We've gone up very, very quickly. We saw a very bullish Q1. So everything's looking good. Everything's looking great. I suppose short-term is the only question. There are a few things in short-term charts that I am a little bit worried about, I guess you could say, but only in short-term aspects. Total cryptocurrency market cap quite heavily facing resistance here at this red box that we've seen before. Again, could be indicative of a correction, or it could just be indicative of a consolidation zone before a breakout. And we can see that this almost would resemble some sort of ascending triangle if we really tried to stretch it that way. So I don't know much about the short-term. I can't give you much insight about the short-term, but I suppose that's a good thing and a bad thing, right? Because if it was really, really, really bearish, I'd be saying it's going down. I don't think it's really, really, really bearish. I think it's, it very much is a coin flip, and that's a good thing, for the bulls. Because after such a beautiful start to the year, you would expect some correction. But I'm not even willing to say at this point that it looks bad enough to see a correction, because I don't think it does. I think it looks very fine. I don't really know what else to say about it. It looks 50-50. So it's a good thing. If you're a bull, it's probably a good thing to hear me say that, because it's not bearish enough for me to be like, no, we're going down to 25.2k. It's simply not. I think it's very 50-50 at this point. Probably a little bit more bullish, just a tiny bit more bullish, but and then S&P 500 is another thing I wanted to discuss, and interest rates and inflation, just a brief overview of it. We do have the CPI coming out in just a few days here. I think probably about just under a week actually, and we have the consensus coming in very, very low, 5.2% market consensus. The previous inflation rate was 6%, so that's indicating that inflation is on the decline quite rapidly. I know that data can be manipulated quite easily by the Federal Reserve, but the point is that that's probably good news for the markets. Inflation's going down massively, and interest rates are likely to have topped out. We have a 48% chance, and in fact, it just switched over from the time I was making this video. They're about 50-50 at this point, but it was 57 when I first started today. But basically, there's a considerable chance that interest rates are already topped out. And if they're not topped out now, we see one more hike, and then they're topped out. So I think that traditional markets don't look particularly bad, to be honest with you. I mean, if we're looking at what's happened with traditional markets, people have been screaming, oh, we're going down, we're going down, we're going down. And it's been 6 months since we bottomed out. And at this point in time, inflation's very, very low. It's not very low, obviously, but it's much lower than it was 6 months ago. And interest rates are topping out. So, will we go down further? Who knows? I'm not a economic expert. I don't know much about traditional markets in that regard. But I do know that inflation going down that rapidly and interest rates topping is not bad at all for the market. So I think potentially some of the recession FUD, it's not FUD necessarily, but by definition of the word FUD, fear, uncertainty, doubt, it is FUD. So I think some of the FUD is losing strength to a certain extent. And I have been very clear in the past, I think even if the S&P does go down further, which I don't think is certain, by the way, because they could just go back into QE. They've just printed $200 billion, which were raised 6 months of QT. So there's nothing really saying they can't just go back to printing. In fact, there's a lot of indication that they might go back to printing. But if the bottom is in for the S&P, that's even better for Bitcoin. I mean, they're not reliant on each other, but they are correlated to a certain extent. And if the S&P bottom is in, that's great to hear. But that's generally my view on the market at this point in time. I hope you enjoyed the video. I hope you found something useful in this video. There was a lot to cover there. I do have a couple of things I want to talk about. I'd appreciate it if you stuck around. First and foremost, we do have a VIP sale. All right, so we have sale on BIP. You can find the link in the description below. I'll put a pinned comment as well. 25% discount on all VIP memberships. It brings it down to 75 USD for 3 months, which is a bloody bargain. You're not really going to get better prices than that. 75 USD for 3 months, less than $1 a day for trading signals throughout the week. We've got results. We've posted our results from the last 2 quarters, and they've both been pretty bloody good results, right? We've got 3,400% gain in Q1, for example, so that's good stuff. Check out the results, check out the sale if you're interested, and join me on Telegram there in the VIP group. Then we've got BitGet Exchange, guys. Best exchange in cryptocurrency market, in my personal opinion. They didn't reach out to me for a partnership. I actually reached out to them. That's how much I like the exchange. And, you know, I use this exchange for over a year now. Going on a year and a half, actually. And it's a very good exchange. 5 times lower fees than Binance. Better than the big exchanges in all ways, in my personal opinion. I'm not a big fan of the big exchanges. And, you know, with that said, this isn't even a small exchange anymore. When I first started using it, it's getting big itself. We've got copy trading, we've got, you know, protection fund, we've got all that kind of stuff there. We've got, you know, as I said, 5 times lower fees than Binance. Many pairs. They've added in about 15 new pairs for trading in the last couple months or so. So it's going well in that regard. If you're interested in this exchange, you can sign up using my referral link and you get a 15% discount on trading fees. If you're looking for a new exchange, looking to get away from all the FUD with the big exchanges recently, this is for you. So sign up using my referral link, help out your channel, help out yourself. Then we've got the Crypto Academy, guys. If you want to learn how to trade for yourself, and this is if you want to take your trading to the next level, you want to become a career trader potentially, or even take it kind of part-time and do it on the side effectively and not lose money. The way you can do that, well, you can do many things. You can go online, you can go on YouTube, you can read a book, but you can also check out the Become a Trader 10-unit course, taking you through basically everything you need to know about trading, whether it be about what even is Bitcoin, what even is a financial market, how does it work, and then all the way through to all the charting stuff, and then market psychology and how to find trades. So lots of good information in here. You can check that out in the description below. I have the link to the website, and you can ultimately throw us an email at cryptoacademycourses@gmail.com if you're interested or you have any questions or anything like that, and we'll answer those for you. So guys, thank you for watching the video. I hope you enjoyed it, and I'll catch you in the next one tomorrow. Cheers.